Good afternoon, everybody. Happy Thursday, and welcome back to another StockTwits Q&A session. This time, we're joined by Mr. Mark Sperling. So welcome, Mark.
Thank you, Brittany. How are you?
I'm good. Let's just dive right into it today. Let's just start off with your focus. Where was your focus in the market today?
Good question. And I'll give you a little idea of my thought process. And anybody who's been listening to me in general sort of knows my thought process. I've been trying to buy on pullbacks. I think we're going higher. I think we're going higher till the election. This pullback that we just had, and obviously we're up today, was an opportunity to get involved in some of the stocks. We have leadership. We understand Apple and some of the other stocks are, waning a little bit, but that's just opportunities in my opinion. Google showing leadership, the banks are showing leadership, and this week we sort of have sifted, I guess, through some of the back and forth action, and today we gapped up, and it seems like we're back on track to move higher. Obviously, we have a jobless number tomorrow. That could change things, but overall, I'm still bullish, and that's not wavering.
Okay, well, Robert Landry would like to know about your hedging strategy when shorting the spiders. He says both the size of the short position versus your longs, and how you decide when to cover.
Okay, so the hedging strategy, really, it's just to mitigate some of the longs. Overall, if I'm long Apple, Google, Amazon, Baidu, and all these high beta stocks, quite frankly, shorting a bunch of spiders or shorting a bunch of IWMs, not necessarily the proper hedging strategy, but I'm really just trying to mitigate some of my risk. So overall, I would say, do 20% of the overall portfolio, and I hedge it with some spiders or Qs or IWMs. But if I'm long all those stocks, most likely I don't feel like the market's going down anyway, and ideally I can handle the ebbs and flows on the most part. It's just a hedge. Again, it's to mitigate. I want to lose on those spiders ideally because I'll make a lot more on the stocks that I'm actually playing.
Well, you mentioned the IWMs. We have one from Use Guy saying, what is your opinion on IWM? Is it in a wedge pattern or a downtrend?
What's up, Use Guy? This guy, basically, if we look at the chart, we'll put it up for 2 seconds, and you can just see it's come down. And I know it was sort of showing in a little bit of an ascending channel over the last few days. It still hasn't resolved itself one way or another, whether that's to the upside or the downside. It is trading above the 21-day moving average right now currently. So the resolution will come in over the next few days. If we obviously gap down below, it looks like 83.20-ish. It looks like a little bit of a bear flag. And if you gap up above 84, 40, 84.50, it's a nice little bull flag, and it's buying on pullback. So it hasn't resolved itself yet. That's part of the job, and that's part of what we do as traders. You don't really know. You got to play what your thought process is. In my opinion, I don't think it matters really what the jobs number comes out at. I think we're going higher, and it's going to take a lot for me to waver on that opinion, at least temporarily.
Now, what do you think accounts for the recent relative weakness in the Russell? That question comes from Trading Licks.
I think just the fact that we did have a nice little uptick across the board in the market, and then all of a sudden, just rule of thumb, whenever CNBC and everybody gets real bullish, saying, oh, we're going up, we're at highs, normal rule of thumb, we're going to get a pullback somewhere along the way. And quite frankly, for 6 weeks, we didn't get a pullback at all. And so this is a little bit of the shake a tree. And shake the tree gets the weak traders out and gets the weak hands out. And really, quite frankly, in my opinion, it was a buying opportunity. I'm not saying the last 2 weeks have been easy, because they have not. It's been very difficult. But at the same time, it seems like we're trying to, I'm still a little bit quicker to the trigger on taking my trades than I was, say, 2-3 weeks ago. But, 1-2 more days in this uptrend, we're going higher for an extended period of time again, and we're heading into earnings season, which again is nice.
Right. What's the key to managing all the mixed signals that the market is giving us right now?
Experience. What is the? I think it becomes a market of stocks rather than a stock market. You can try to predict we're going up, we're going down. I've stopped doing that a long time ago, and I try to trade relative strength, relative weakness, and I was saying, I'd say probably mid last week, or really even before that, that we're now in a little bit more of a scalper's market and trying to find opportunities. Versus before, I was just all bullish and you couldn't waver. Things changed. VIX popped up a little bit. Headline news started affecting us a little bit, and some of the stocks actually went. In Apple, some of the leadership waned and came all the way down to its 50-day. That to me was great, because it shook the tree a little bit. You need the shake in the tree in order for us to go higher. You can't go higher when everybody's long. It just doesn't work. Quite frankly, the other way around also comes into play. You can't go lower when everybody believes is so bearish. That's when they turn. So keep that in mind. Overall, sentiment is important.
That's good advice. Here's one from Mickey Quebec saying, hey, T3 Live, do you trade at the opening, let's say between 9:30 and 10 o'clock?
Well,
you jump right in there?
You're not watching our VTF, so yeah, I do jump right in. Do I jump in with a whole lot of authority? Not if I'm smart. I try to give people the warning. Certain markets where you get paid handsomely for jumping in, certain other markets you don't. I'm almost never in a tier 2 to tier 3 at the beginning, the first 15, 20 minutes of the trade, unless I come in with an A-plus trade that I want no matter what, and nothing's going to deviate from that. Normally, I'm in feelers, and then I let those feelers play themselves out, and then eventually they get a little bigger as I like the position a little bit more.
Well, educate Mickey Quebec, since he's obviously not watching the VTF. Tell him about that.
Well, the VTF, it's something that is unique for us and it's unique for our company, and you basically have real traders in real time showing their positions. You see whether we're net long, whether we're net short. We talk about the size based on tiers, and we answer questions in real time. So that's the whole idea of T3 Live. It's real traders, real time, and we really do our best. We try to do our best, to make others get a little better based on what we're looking at.
Yes, and we are not just taking questions from StockTwits, we're also taking questions from the VTF. So just a side note there. But moving on, Evergreen has a question. He said Scott said on Bloomberg that he thinks gold and silver could go higher. So what are good entries for, we got a lot of names here, but let's just start with the GLD.
Okay, so I agree with Scott. We don't always agree, but we can agree to disagree sometimes. But in this situation, I do agree with Scott. We're at 1,800 on gold, so you might get a little resistance. The one thing with gold and silver, both, is historically they do most of their moves overnight. So it's much more of a swing type trade than necessarily a day trade. So if you're not in that mode, if you're not willing to take a position and really let it trade over time, it's probably not for everybody. But over time, I do see, it's been basing now for the last better part of 2 weeks, GLDs, and it looks like, you might get a little resistance around 1,800 at the spot gold price. But overall, it looks like it's going higher. And if you want to look at the weekly chart, you can see GLD possibly could get to the 180, 185 level, which again would be back in 2011, August 2011. And you'll see some real parabolic moves that will happen in the gold and silver market across the board. Okay.
What do you think, just looking at the GDX, what do you think would be a good entry point there, potentially?
GDX. Okay, that's the monthly. I would probably be buying as close to 52 as I can. That's right at the 21-day moving average. And probably add, if it closes with some authority, above 55. So, okay. So the nice little sweet spot's probably you're not going to get 52 if it's really meant to go higher. Between 53 and 54 is probably the sweet spot.
And while we're on it, let's just take a look at the SLV. What do you think about that?
I was trading it today. For some reason, I can't stick with it. I don't know. I think it looks great. I think it looks like it's coming out of a pattern, a nice base pattern. And to me, probably right around here, 33. It should hold 33, 32.75, and it should go higher. And again, let's look at our weekly chart so you can just see what I'm looking at. We all remember, if you were trading back in 2011, what AGQ, SLV, gold, what they all did. They went parabolic beyond. And we're still in a tight range. It could get a little crazy if we keep going higher. So look out. I do believe that over time we're going higher in both those gold and silver commodities.
All right, here's the big name. Let's talk Facebook. JBP says Facebook is one difficult stock to trade. No news there. Very volatile. It's been in a tight range all week. Do we see higher prices from here?
Well, the key to Facebook and the key to trading is you don't trade everything every single day. You trade it when there's a compelling pattern that makes a whole lot of sense. So if we look at the chart for Facebook, I said this morning in my morning call, and if you were actually looking at the VTF, this is before the market open, 2150 would be the ideal price. Between 2150 and 2120 would be the ideal price. I would be looking to buy Facebook. I did get involved. I did not hold it. The low happened to be today. Again, I got to look at my daily. Put a 15-minute chart up. The low was like 21.41. So I bought a little bit and obviously closed right around 22. It is getting close. Close, no cigar, not sure. We're getting close. Close doesn't mean I'm necessarily going to be, so aggressive. The last time I was very aggressive, I held it from 21 to 23.40, and our friends at Barron's decided to bash it. So you gotta respect that. We understand that a lot of shares are coming outstanding. You gotta understand what's going on behind the scenes. It is wedging. It is getting tight. At some point, it's probably going to move higher. Most likely, above 22.50. I probably will add with some authority, and above 23.50, get a very aggressive, because then it probably fills the gap.
All right, well, while we're talking Facebook, let's talk LinkedIn. Did you hear the news this week? They're adding the following feature, taking a cue from Twitter.
I didn't hear that.
Yeah.
Really? You see, there's social media. You're on top of things.
Exactly. I'm on it. So Mojo has a question about LinkedIn, saying for it to make new highs this year, shouldn't we be seeing more volume the last couple of days? He says it's somewhat unconvincing right now.
It wants to be unconvincing. It's okay. That's what these stocks do. They bore you to death, and then they go higher. This is the best social media stock out there, based on the technicals. You can maybe put Yelp in that same category, but LinkedIn is basically trading at the top end of its trading range for the last month. To me, that's bullish. It tried to shake the tree a little bit, and I was long, and it actually shook me out, which doesn't normally happen, but it went down to 117.50, and now it's right back to 122. So really the sweet spot is between 118 and 123 is the place to get involved. And above 125, 126, you're going to get a lot of people attaching onto the momentum. And again, it is heavily shorted, so I think it's going to happen. You need the market to help out a little bit, but I think it's going to happen. You just got to be patient. It's not necessarily about the chart, it's about prices also, and I think that's the key to trading overall.
And you're not playing that name right now?
I am playing it. I'm not long it right now, no.
All right, let's talk Apple. Speaking of headlines, with the news of the iPad mini coming up, do you believe that this will bring Apple back to the 700 level? That comes from Joe.
Apple's getting above 700. It is. It's just a matter of when. It could be happening after earnings. I would imagine earnings are going to be good, understanding what is part of the quarter. And I get the other argument. The other side of the argument is everybody's in Apple. Nobody hates it. You get a little, it's the market cap, it's the biggest stock out there, it's the biggest company out there. What happens if they do wrong when everybody's involved? It will get hit. But for some reason, it just, based on price earnings, based on some fundamentals and how much they're making, to me, it's still a buy on pullback until it's not. And you got to respect that. And it's been a few years of that. So, you can get ebbs and flows, and you got it. You got it from 705 down to 650. Nice little trade, and for those that were short, you did a good job. But if you didn't cover yet, I think you're, looking at it the wrong way. I think it was time to cover. We talked about it on the VTF also, and at this point, it's trying to find a new level, but it's going to break this ascending channel at some point to the upside, and I would keep it on the long side, or looking for the long side.
Okay, WW Zone says he is long Apple. What tier should I be in for swing and daily? What stop loss?
You see, swing and daily, it really depends on the trader. I can give you one idea on my risk tolerance. It depends on your risk tolerance. I can't give you that exact measure on what you're really, how much you should be risking. Most likely at this point, it should hold 650, which is the 50-day moving average. And now the 50-day is moving up. So I don't know where you're long, but overall, it should be minimum tier 1, tier 2. Every time it pulls back, even if it's below 650, 660, I think that's when it becomes viable. Between 655 and 665 is where it's probably going to hang out for a little while.
All right, well, speaking of your strategy, Jenny the Trader says, Mark, what is your favorite day trade pattern? Scott's favorite is Red Dog Reversal. We all know that. What's yours?
The Sperling Bull Flag. I love leadership. I love finding leadership in stocks that really are on very good uptrends, and I like when they pull back to key moving averages. That at this point, I could have said Bull Flag was my favorite pattern for many years, and it was, but problem is we're not getting paid the way we used to with buying new highs. And at some point when retail or more momentum comes in, that will happen. So instead, I'm buying a little bit more on pullbacks, which means I got to be a little bit more patient. I got to be a little bit more strategic. Certainly not instantaneous gratification, but hence why I was buying. If you were looking at Apple, if you were listening to me at all in the last 5 days, Apple, I got back involved around 652 in this move, and I rode it till yesterday. Actually sold some this morning, and I bought calls, and I'm still in the calls. So overall, it's about picking prices, picking levels, and waiting for those levels to come to fruition.
All right, we're going to take a quick break. We'll be right back right after this.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the Education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
We're back answering your questions live, joined by Mark Sperling here. Mark, we have one from Market Picker saying, I've been swinging AOL and Visa for 3 weeks. Today, I put on some JP Morgan and Lulu. Can I get your thoughts from a swing long perspective?
So AOL, good looking chart. You've done a good job. What was the other one?
Visa.
Visa. Another good job. So you should be patting yourself on the back, but not too hard, because the second you start congratulating yourself, something bad happens. So don't be too proud of yourself, but it's been a good trade. So you just started looking at Lulu and JP Morgan, right?
Yes.
Lulu, roughly, this is the area you get involved, anywhere between 74 and 76. Again, I'm not giving you 75, so 75 is the perfect price. But again, a stock like this moves $2 every single day. So if you can't hold $2 gyrations, you can't trade this. You can't put it in the swing. So 75, 74 looks like the level it should hold. 73, 50 is 21 day. I think it looks good. I think it's a leadership stock. I understand, whether it's some big hedge fund guys are trying to short it. I'll put up the weekly. Looks great to me. Bounced off the 8-day moving average when it came back down. And I think it needs a little more time, but I think it looks good. And, just respect your levels accordingly. JP Morgan looks good also. It has held 40 now for a better part of a month, just about, a little less than a month. And it looks like it's trying to break above there. JP Morgan's going to be one that we're going to look back. It's 45, 46, 47 when the banks start to show leadership. They're beginning to show leadership. And when they start showing leadership, you got to be on the ride. You got to be invited to the party. And the party, I think, began a little bit. So, you'll get your pullbacks, but that's going to be your opportunities to get involved. It's a patient man's trade. It's not. You're not going to do it. You're not going to get rewarded right away. But I think it's one of those that by the election, you'll see the banks rally.
Great advice. Okay, here's one from Stock Chatter. Netflix, where is the next resistance here? Thanks.
You really had to say Netflix. Netflix is the stock that just stung me this week. Not because I shorted it. I missed it. And I don't miss Netflix. I get so mad. And if you guys are actually in the tri-state area this week, we're doing our seminar at the Marriott Marquis, and it's something I'm going to be talking about. I hate when I miss my stock ideas, when it's one of my stocks and I saw it and I was involved and I just really didn't capitalize on it. So it happened. I'm over it, sort of, if you can tell. But overall, a little resistance right here, just because it's at that previous high, and that has been resistance. Hopefully, if it gives us an opportunity to buy it back on a little bit on the pullback. Heavily shorted, broke a downtrend, gets in that gap, which again is around 67, 68, it looks like. If it gets there, begins to fill it. We also have earnings coming out. So you have some crosshairs on what's really going to happen, but overall, it seems like it's good. Obviously, good volume. You missed a buy. Just because you missed a buy doesn't necessarily mean you should be shorting it. But I do think it needs some digestion, at least for a few days. We'll see what happens. And thank you for pissing me off. I'm just kidding.
Well, it would really make you mad if you said he actually said he knows you missed it and he can't believe it.
Come on,
Rubbing
come
salt in the wound
on.
here.
I don't miss that many, but yeah, I missed that one.
I know. All right. Well, we'll change the subject here. Sensitive subject. Here's one from Bengi saying, what are your thoughts on eBay?
eBay. I talked about it yesterday again. I keep mentioning the VTF because you're not necessarily going to get, some of these stocks, they move in real time. It's like you can't just look at your weekly chart and say, I'm going to be buying it here, or even your daily at the end of the day. On the VTF, I was looking at 48 was the sweet spot, and it hit it yesterday, and that's when I got long. I think I was long a little bit in the swing, but I got a little bit more aggressive. For now, I'm holding it. It was upgraded, so that's, I guess luck, but at the same time it was ready. The pattern was ripe, and we were up in the market. So 50, 51, probably a little resistance, but overall it's in a nice uptrend, and it's respecting the moving averages. So I think it goes higher. So if it gets any pullback closer to 48 is probably viable again.
Great. What about Baidu? That comes from Mark Allen.
Baidu, I actually put in the swing for the first time. I talked about it today. Actionary play. Here's a smaller time frame just so you guys can see what I was thinking. I bought around 112.70. I noticed it probably around 50 cents. I didn't buy it at 50 cents. Put it in the swing. At this point, I look at 110 as, I was looking at it anyway. It's not a great looking pattern, but at the same time, it's at the lower end of the trading range. It's Baidu. It has been a leader in the past. So risking $1, $1.50 at this area for a possible move back up to 117, 118 might be in the cards. So I'm long.
Excellent. Market Picker, what do you think of AIG now that it's back testing this $35 level? On the weekly, would you say 40 is a reasonable target? Kind of choppy.
No, this is the weekly. So if you can decipher anything from the weekly, good luck. You really can't. I think it's everybody. Here's all the moving averages, all converting. Kramer, I think, said it was one of the cheapest, based on valuations out there. It has a book value of $80. I think it's going higher, period. But at the same time, you got to respect the levels. When it pulled back to 32 was the place to buy it. Now at 35, probably needs to hover around here for a period of time, and we'll wait and see. Any pullback, it seems to me, viable.
Okay, we have Ken and Stock Chatter here mentioning VRNG, saying it had a nice run so far. What do you think about this one?
Okay, you don't very rarely get a $3 stock having follow through in this tape, and it hits 555. Take your trade, move on. Good trade. It looks great, but these $5 stocks, they could become higher. I would minimum be taking, having a trailing stop and taking some off along the way.
All right, Fernando is here asking about your Apple strategy. I know we touched on it before, but we didn't answer this. So he's saying you guys trade Apple a lot. Do you also do options to hedge or lock in some gains? Plus, it's a good vehicle to eat premium due to big time decay.
Good question. I normally don't write cover calls against my position. I normally buy the stock outright or buy the option outright, the call or the put, based on that I'm trading it and it's timely. But yeah, no, that's a good strategy. And right now you could be writing 700 calls against it. Understanding when earnings are. You certainly can be doing strategies, various strategies. Right now I'm long the calls, and I'm going to hold it for the time being. Am I going to hold into earnings? We'll have to wait and see. I sold some today. Not sure if I'm going to hold it into earnings. It still has 2-3 weeks, and a lot can happen between now and then. So we'll have to wait and see.
All right. How about natural gas? Ken asks for your thoughts on natural gas stocks like WPRT.
WPR2. Natural gas is it's trying to find a rounded bottom. I don't think it gives you a whole lot of quick trades in there. From a technical point of view, it's still hanging below its 200-day moving average. So I think 33.50 is some resistance. I'd wait. Looks okay. Natural gas looks okay, but it's not an A+ trade. It's not something I'm going to spend a whole lot of time on.
Okay, while we have that chart up, Dana was chiming in asking what price you think it could be heading to. So while you may not be actively trading it, can you see a target for it?
If you look at the daily, again, I think probably the 200-day moving average, 33.50. But it could come back to 30 before it gets there. So 33.50 would be the price that you're going to get a little resistance, at least temporarily.
Okay, here's one. Travel to Paradise. I like your name. He's asking for your take on Bank of America and HIG.
Bank of America, I have been long. I'm not sure if I still am, I got to be honest. I forget. I think I might have sold some today, even though no reason to sell it. I think I just got bored. It's Bank of America. It moves very slow. Looks good. $9 was holding, and it looks good. Here's the weekly chart. It looks like above 10.50, you're getting a real move higher. At some point, it's going to do it. I don't know how, but at some point, it's going to happen. And HIG, one of the insurers, looks good also. I haven't really looked at that one in a while. Again, you're right at resistance 21. So I'm going to wait for a pullback. If it gets back down to 20, 19.50, that's probably the time to take a position again.
So if you're not in Bank of America, I think you'll be looking at it for...
I mean, I look at it. Yeah, I think if I sold it today, I'll probably wait a day or two. I don't even remember because it's a long trading day. But yes, I think $9 is the level. It's the line in the sand that I think you can look at the stock.
All right, Mab. I remember this guy. MCP showing signs of life finally. What's your take after the past sell-off?
Really? You're gonna throw MCP in that little... Again, that one I got hurt on. I made a lot of money and I didn't take the trades as I should have. MCP, 10.50, 11.50 is the area. I think it's boring at this point. It needs to get back above moving averages. It needs to break a downtrend. Again, it's not where I would have focus. I still have options, so maybe they're gonna, go back and come back into favor. We'll have to wait and see. You're gonna have to stay tuned on a day-to-day basis to see if anything happens more interesting right now with that stock. Right now, it's not something I'm gonna be concentrated on.
Okay, here's one from Market Picker, PCYC. He says, unlike AIG, a very clear weekly chart, if you didn't buy it when it held 60, do we have any business buying it here at 68?
Good question, and the answer is no. You have no business. You have no business buying it right now. You can trade it, but not from an investment point of view. You shouldn't be buying it right now. You should be waiting. If it can hover here for 2 weeks and hover at a newer trading range, then we can have another conversation.
Okay.
But it just got up here after a move from 60 to 68, resistance 70-ish. Good company, great biotech, but I think wait.
So is it too soon to determine what level you would consider?
Yes. No, I think if it gets back down to 64, 65, that's when you get back involved again.
Okay.
Or it bases up here for a period of time. One of the two. And that's part of the market. You don't really know what happens.
Right. All right. Well, Trad10 saying, what are your thoughts on IFF consolidating tightly off a large move in August?
I've never traded this, I don't think, which finding a stock that I've never traded is sort of a
curveball, keeping you on your toes here.
There we go. Thin stock, mid cap, obviously. Looks good. I mean, obviously had a big, I don't know why it was up. Maybe it was earnings that it gapped, that day from 56 to 62. Nice trade, nice level. Looks like 59 should hold. This is the area you would probably get them back involved in using 59 as a stop. The 8 days starting to move up. It looks like timely-wise, you're giving a good idea, and I'm actually going to write this down. It's something that looks pretty good on a timely basis.
Love a new idea.
Yeah.
And on that note, we're going to take another quick commercial break. We'll be right back.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
We're back answering your questions live. We have one from Market Picker saying GE recently broke important resistance around 22 on the weekly. What are your thoughts for initiating a new long position for a longer term hold?
GE looks good. 21 was probably the level.
Okay.
But long term, it looks like it's coming out of a nice base. And you go back many years, GE could get back to, some luster. So it could really go from a 20 to a 25 to $27 stock on the weekly. Is it too late if you're looking at micro trading? Maybe, but you might get another opportunity. But it looks good. It seems like it's just grinding higher, and it's respecting its 8-day moving average and obviously the 21 days. So, you might not get the opportunity you always want. I like to wait for that opportunity. I'm not in it, but it does look good.
So is 21 still that magic number we're going to wait for?
I think so. I mean, roughly around there, 21, 22, I think you might even be able to take a stab at it.
Okay. Here's one from Pepperino. Hi, Mark. What is your thoughts on Vale? Almost created an inserted head and shoulders pattern.
Which one?
V-A-L-E.
V-A-L-E. No, V.
Yes.
V as in Victor. A-L-E. Yeah, I mean, if you want to, I don't want to give Redler too much credit, but it looks like a red dark reversal happened with him not being there. So we can look at a smaller time frame. Obviously gap down, came back above, and it did work itself higher. To me, that's, especially if you were back involved, looks like 18 might be a little resistance, but I think that's one I would watch for the next day or two on big volume. And it's going to probably try to regain some movement averages. So I think it looks good. Certainly used the previous stop, 1735, his previous low as a stop. But I think it's trying to break an ascending channel at this point in time. So it looks good. VLE looks good to me.
Great. What do you think of FCX? Zazu says it broke the descending trend line today. Wants to know your thoughts on it now.
Somebody asked me that in the chat room today, and you know what? It looks okay. I was saying these commodity stocks have just gotten beaten up, for weeks, for 2 weeks at a time, and I was looking for, try to bottom fish. Different type of trade than trying to buy leadership and buying them in the pullback. This is, stocks that are not leaders, but at the same time they have gotten beaten up. So overall, I think it looks good. And right around 39.50 to 40.20 is the level you should be getting involved if you're involved.
Magic
and I think
number.
42.50, 44 is the area you can get to.
Okay, great. All right, Fuentesa, how does the MLNX chart look?
It's trying. It's a leadership stock that got beaten up on some news. I think it's still a leadership stock, and it hasn't been as easy, but I was talking about above 105. It hit 110 today, 111 today. Came back in a little bit. I think it should hold. As long as it holds 105, it's good shape. This is the 15-minute chart I have up. So you can see back above 108, you'll probably get back, back to 110, 112 very easily. And I think based on what last month's earnings report showed up, if it's any sort of, if it's showing any sort of similar growth, it's probably going to be at new highs at some point soon. But again, that's more of a fundamental trade. It is a leadership stock. It does look like it should hold 105.
Okay, we talked natural gas before, but we didn't talk this name, UNG. Just Chilling says, great shows day in and day out. Thanks, Just Chilling. Has natural gas UNG hit its top?
No, it doesn't look like it. Natural gas, I mean, this thing has been, natural gas in general has been done for so long. I mean, this is the chart. It looks almost similar to an AIG that, is starting to wake up. That's a weekly chart. Gets above 22, 22.50, which it's going to get above there at some point, 23. Probably makes a move to, it's eventually maybe 27.50. So it looks okay. you just got to, it's been such an out of play sector for so long that, at some point it feels like it's waking up, and it's just not going to, a lot of it's going to happen overnight, unfortunately. So just keep that in mind.
Okay, maybe a little bit of a tough one there.
Yeah, but it's still, again, still looks good and still intact.
Okay. How about soda? SodaStream, MMCM saying, is there any hope for soda near term, or best to dump now?
Best to have dumped, back a few weeks ago. Doesn't seem like it's getting luster again. If you're still in it, give it another $1. Give it to 35. Respect that level. That would be where I dump it. It just came from 45, so maybe it holds there for a little while. It's not a leader, so you got to respect that. It's, everybody's like, it's one product company. Okay, heavily shorted. Okay, technically it doesn't look great.
Okay. All right, JMac Trading. My question is on CRM. Is CRM going to break through that 161 area to new highs?
Brittany, it seems like it is. Yeah, I guess. I mean, if we go higher in this market, the clouds seem like they're always the sector that they go to. This seems like one of the best in breed type stock. Chart-wise, technically, it looks great. And yeah, it looks like it's headed higher, period. Do I think it needs a little more time? Yeah. Maybe it's earnings that really push it higher. So it looks good.
All right, here's one from iMarco. You're great, and I'm so sorry that I'm from Europe and I can't come to your seminars. We're bumming out Marco, but he's still chiming in here. We'll answer you here. He wants to know about Coors and Baidu. We did Baidu already, so let's talk Coors.
Well, thank you for the kind words. That's very nice. Always appreciated. Coors had the secondary, hanging right at its secondary. The secondary is a 53. Respect it. Pop below there, 51 and change. That was an opportunity to get involved. Seems like it's going to hold here for a little while. Might not go anywhere for a period of time, but I think this level and this price is the right price to be involved in Coors.
All right. You guys are swamping me here. Let's talk this one from... Oh, okay. Let's talk actually about the offerings that T3 Live has, because this guy's saying he needs to improve his trading skills, and he's saying universities have MBAs. What skills and degrees can I get here?
Well, we have a few different types of courses. You can go to our website, certainly at t3live.com. It gives you all the rundown. There's swing courses, there's momentum courses. We're in the process of making a beginner's course. And eventually, we're obviously going to make different asset classes. But right now, I think the swing and the momentum are the two courses you should be looking at that really give you a little bit of a rundown on really how to make money in this market. Minimum, they educate you. Every other career, you educate yourself. For some reason, people in this career think you don't need to educate yourself. You don't need to, spend money and spend time to do something. You just in front of a screen and try to trade. It's the easiest way to lose money. You will lose lots of money. This is something that will help you, make the curve a little easier. Trading's about winning and losing, risk versus reward, obviously. But these are tactics that we have been using. I have personally been using for 15, 16 years and have helped develop all these courses. And I think it's something that you should be, if you're involved in any sort of capacity and you haven't educated yourself or you're not continuing to educate yourself, period, you're doing yourself a disservice. I can't say that enough. I've said it before. I believe it wholeheartedly, and I think it's something people need to really respect. Always learn. You got to always learn, and we have plenty of, the one difference in why we're separate T3 is because we are real traders. We're not marketers. That's not, we're getting better at it, certainly, but it all comes from, real traders who've been doing this for many years.
And you will be at this weekend seminar, so for those in the area, just tell them how they can get involved in that and what will be going on.
Basically, the seminar is going to be at the Marriott Marquis. It's $197. We don't have a whole lot of seats left, but look at our website and you can get the link. The link's been on Scott's Twitter and my Twitter a few times. And you're getting a slew of presenters, myself, Scott, Pete Ranzulli, Mike and Steve, who are on T3 Live, a guy, CEO of Minionville, one of the heads at StockTwits. You're getting Rob Smith. You're getting a whole lot of people involved. And it's not necessarily about, buy here, sell here. A lot of it's inspirational. A lot of it's motivational. And quite frankly, it's real stories, real situations. And you're going to come out of it pumped up at minimum. And ideally, you're going to get a lot of information. And it's a weekend. It's 2 days. A cocktail party afterwards at 4 o'clock. 430, the Marriott Marquis. Please look at it. I'm telling you, this is not something I'm going to talk about on the VTF. It's just not, you know, they're going to happen a little bit more frequently, but this is a big one, and it's a 2-day event, and I think it's going to be great.
I'm sure it will be. Well, thank you so much, Mark. Thanks to all of you for sending in your questions today. We'll meet you right back here next Thursday. Have a great night and enjoy the seminar.